If you have a finance interview coming up and you are still relying on textbook formulas, you are likely going to struggle. Today, we are fixing that. In university, professors love pristine, perfect data. They give you the growth rate, they give you the exact WACC, and they ask you to solve for the value X. But walk into a real finance interview, whether it's corporate finance, investment banking, or real estate, private equity, and that academic bubble burst. Interviewers don't want to know if you can memorize a formula. They want to know if you can think like an analyst. So, gap number one, corporate revenue forecasting. In your exams, the question always starts with a company's revenue grows at 5% per year. In the real world, if you build a model and just hardcore a flat 5% growth rate because it feels right, your senior analyst is going to throw it in the trash. Yes, you heard it right. Real analysts build driver based models. If you are interviewing, don't just say I would grow revenue by 5%, say this instead. To forecast revenue, I would look at the operational drivers. For example, if it's a SaaS company, I would break it down by monthly active users and average revenue per user. If it's a real estate asset, I will look at the market occupancy rates, base rent escalation, and square footage. Boom! You have just signaled that you understand business operations, not just maths. Gap number two, the three statement financial model. Textbooks treat the income statement, balance sheet, and cash flow statement like three separate chapters. In an interview, they are treated like an ecosystem. You're almost guaranteed to get some variations in these questions. Walk me through how a $10 depreciation expense flows through the three statements. Most of the students trip up because they try to memorize the final balance sheet numbers. Don't do that. Follow the money step by step. Here is your bulletproof script for this question. First, the income statement. Operating income drops by $10, assuming a 20% tax rate. Net income only drops by $8 because of the tax shield. Second, the cash flow statement. Net income is down by $8 at the top. But since depreciation is a not cash expense, we add back that $10. Net cash from operations is up by $2. And third is the balance sheet. Cash is up by $2, but on the asset side, net property, plant, and equipment is down by $10 because of the depreciation. So total assets are down by $8. On the other side, net income flows into retained earnings, dropping equity by $8. So both sides of the balances are perfectly meshed. So master that flow and you see you will pass the technical filter. Gap number three, relying on the standard IRR and NPVs. So in class, you learn the standard mathematical formulas. In an office, you use Excel, right? But if you tell an interviewer, you'll just use the regular like IRR formula, you're missing a crucial detail. Standard IRR assumes cash flows occur at perfectly equal intervals, usually exactly at the end of the year. Real life isn't that clean. Real investments have irregular cash flows, especially in fields like real estate or private equity, where distributions happen sporadically. Alright, so tell your interviewer I'll prefer using XIRR and XNPV because they tie cash flows to exact days, making the return profile far more accurate. And for the real world decision making, that one letter X shows you have actually built models that matters. So the secret to breaking into the finance as a fresher isn't pretending you know everything. It's showing that you understand how the theory applies to actual desk you will be sitting at. Stop memorizing, start thinking about the drivers behind the data. So, at last, I would like to highlight here finance interviews aren't won by watching the videos, they are won by doing the work. So, I want to hear from you all, what is the one technical topic that currently scares you the most? Drop it in the comments below. I'm going to use your answers to pick the topic for like next dive or the next video so we can tackle your biggest challenge, your biggest roadblock together. See you in the comments. Thanks for watching this video. Good luck. Bye bye.